Hey guys, it is September the 22nd and quite the day post FOMC meeting. I will do a separate video to discuss through some of the things that were said. And I think in a lot of ways, the street is still absorbing what it means for him to be so dedicated. Most of the conversation yesterday really related to, hey, so pretty aggressive here. And he's like, look, we're going to 2% inflation. That's very important. If we fail to maintain it, then it's really hard to have an economy. You really have an economy a bit out of control. And so, given all of that, that's the focus. I think people are really worried about what it implies for rates going forward, but also what it means, the degree to which they're going to slow down GDP globally everywhere because of this mess that we're in. And it's really like I think sometimes people expect too much out of the Fed. You know what I'm saying? Like, and we'll talk about that further probably in the Q&A section. But he can only deal with rates. That's the only thing that he can actually have some kind of control over. The other stuff is not his deal. And food and energy is what it is right now. Now, these are the indices that we're seeing this morning down NASDAQ quite a lot. If you look at what the composite is of that, a lot of that is Amazon and Tesla giving it all back. You've got Apple down as well. And it's really funny because it's almost like people are just playing between Microsoft and Google and Amazon and Tesla. The fact is, probably Amazon does deserve to be a little weaker than it is, especially with what's being said and what the implications of that are with the companies like FedEx, et cetera. Apple to a much lesser extent. Tesla seems to be doing okay thus far, but we shall see. And then Google and Microsoft, we went through those recap videos shortly. Today, I'm going to go through Salesforce because while the street bid them up 1%, which is pretty good given how red this market is, I'm not convinced this was the best earnings that you could have possibly seen. And as much as I don't want to bet against them, the fact is, if we look at Salesforce trades at a pretty hefty multiple. So just out of context, Salesforce is trading at 40 times enterprise value to EBITDA and 32 times forward PE. And while we did see strong top line growth, they have to do the same as everybody else on R&D. So why they should trade at 3 times the multiple of Google and more than twice the multiple of Microsoft is a little bit beyond me, but let's go ahead and get into it a little bit. The last piece of economic data that I might mention, and then I'll also review Darden, which was very interesting as well before we get into Salesforce. We do have manufacturing data coming out tomorrow, bright and early. That could, one way or the other, because this market is so sensitive, set the market off. Remember that the manufacturing data has literally, there's a couple of different data points that come out that give you a sense for it. Some of it is very geographic based. Some of it is all over the place based. But essentially, it's been pointing literally at crosshairs. So you really, I think this manufacturing data may become and create more volatility than you would normally expect. The last thing I wanted to show, Darden reported this morning, wasn't the prettiest earnings report, but wasn't out of hand either. But what I liked is their macro insight into what they expect food pricing to look like. Now, there are restaurants, they get a different pricing than we get at the grocery store, but you can see very clearly mid-single digit on beef, some produce, and chicken, a lot more expensive, dairy, and so on and so forth. Double digit on wheat, which I'm long. The soy complex as well will benefit from that, as well as corn. But right now, I think I'm remaining just in corn and wheat for the time being. Various reasons on that. But really, if you're also long soy, I'm a fan as well, particularly because of the sunflower shortage that will then drive all seed oils upward. Okay, now let's talk about Salesforce. This is what they did. You had top line growth, something like 21%, 22%, some-ish. And then you ended up with EPS that was down significantly. Operating income down 41%, in fact. Looked ugly to me when I first looked at the number. Here's income from operations right here. You can kind of see it. But then that's not a great number. And then it looked even worse on the EPS line because they have a 526 $526 million charge from some acquisitions. So I was like, this thing's being bid up. What's going on here? The other thing I want you to notice is that so there were a few things that were really positive in the quarter in some ways, and then a few things where I'm just like, oh, this is a little bit of a bet. Okay. I'm going to get to that in just a second, but I want to just demonstrate that their cost of revenue actually went up. And I think it's because labor costs, the way they do it, is embedded in this cost of revenue. But you can see, despite strong top line growth, you have your cost of revenue up 32%. I think this is just them hiring people and paying people. They are still getting good growth, so I don't have huge problems with that. There was a bunch that was piled into R&D. R&D was up 30%, marketing and sales up 25%. They're saying they're trying to keep marketing and sales under 30% on the go forward. That is what it is. G&A, not a big deal for them here, up just a touch. But just like everybody else, they're plowing a bunch of money into R&D. If we put the acquisition, the gain on strategic investments back into the numbers, then you will see that, X that, you do have still about a down 40% EPS line. Okay. That to me doesn't scream up 1.5% in a down market, but nonetheless, the street bid it up anyways. So then I'm like, well, what is it seeing that maybe I'm not seeing? And it's interesting because everybody always asks me, May, why don't you just read the transcript? But there was one gentleman that asked an amazing question on cash flow. And as I was reviewing the documents, it just so happened to also be very focused on trying to understand this cash flow statement and having troubles with it. So I'm glad that I'm not by myself. Now, he had a slightly different question about it, but essentially you can see that you have a decline in cash flow here. 6 months ended is slightly up, but some of where that cash flow runs through isn't the kind of thing that makes me really excited, because it does imply that it's, they've got to generate growth. They're not going to do acquisitions, so this will look a little bit better, but then eventually they're going to have to do more acquisitions. Because that's actually where the growth is coming from. The core business is not growing in that kind of way that would constitute a 40-time multiple on enterprise value to EBITDA. And I think that's what this gentleman was getting at was, hey, how should we feel about that? Can you help me out? It's really buried in the back half. It would not be in the transcripts, which is part of the reason why, again, I listen to all the calls because I want to try to understand what other people are thinking, not just me. So that's one thing that bothered me a lot, even though the Bulls are going to take it up today. Good for them. I understand it wasn't a bad quarter, so I can't be that upset about it. Additionally, some of the things that you just want to watch out for if you want to pile in too aggressively on the negative on this, because maybe you're hearing me a certain way. I'm probably going to just continue to very carefully watch it. If it tries to float too much farther up, then I'll smack it down. But essentially, they're doing their first ever share buyback. And they announced it, and she's very beautifully articulate when she talked about the fact that it's the first ever, that it will be, they're already approved for $10 billion worth of stock buyback right now. And it was going to be 30 to 40% of free cash flow going forwards. That's what made me really dig in and try to understand, well, is that a good use of capital or not? And, in other situations, I've been like, yeah, it's a great use of capital. And this one, I'm not 100% sure. I don't know how to think about it. Now, when you buy back shares, that is a return of cash to shareholders that goes to you and me. And that's wonderful in certain ways. But I don't know that I love the way this looks. Like if I saw margin expansion, I'd be a little more excited about this free cash flow give back. But what do I know, I guess? Nonetheless, that's what so you can just basically take this and add back in CapEx, that's operating in activities minus CapEx, and that'll give you your free cash flow. I don't know. I'm not convinced that in a global declining GDP, even though some folks are seeing CRM stuff as productivity improvement and sales oriented, that we're necessarily going to see the kind of growth, that will drive things forward. Their software is a subscription. So this is all data coming in from sales. And if you have globally muted sales, that's not the perfect conditions. Now, do I think they should do the spends and the various things? Yeah, I think they should, because, this is a tough environment. You got all kinds of new players that are coming in here. If anything, they might be able to buy certain companies on the cheap, given how strong the US dollar is, and the fact that some of the meaningful ways of growth are going to be overseas. Now, let's get into a couple of things. They did about a third of their revenue now. If you really look at this, I mean, sometimes things are buried in a way that is delightful when you're then trying to understand the relevance of what's being said to you. But these are all the acquisitions they've done since 2013. I was like, what is she trying to get at? In the presentation, she was trying to get at how these were creative acquisitions and wonderful to the balance sheet. I'm going to show you that while that may be true, there might be a couple other takeaways that we should consider. The first one is that a third of this revenue is now coming from the acquisitions versus the core old Salesforce business. That kind of is what it is. So, and then when we do revenue by area, you can kind of see how that breaks up. And you can see that Tableau, which is being shown here as a 1.5 timer, MuleSoft is now being jammed in with Slack. Anyways, point is that platform on the quick here is growing over 50%. That's really where all the growth is coming from. Data, which is Tableau. And I love Tableau. Don't get me wrong. It's like one of my favorite pieces of software. I am also a data visualization person. But this one right here is up only 11%, which is a significant slowdown in top line growth for Tableau relative to where they bought it. But, hey, you can show it however you want, is what it is. Oh, sorry. And then I wanted to show you revenue by geography. Let me just type that in here. This is what we're seeing. Europe is still a pretty good chunk of the revenue that comes in. It's about 30% or so, if I've got my numbers here, annually. And so, that's something to take note of because it does indicate a pretty good FX issue, as far as that goes. And you can kind of see in the front part of the year that we were getting pretty good growth off of Europe. So that's something to note. All in all, Salesforce, I really can't be as aggressive and positive about it here. So if it wiggles up too much farther north in the next week or so, I will probably smack it down a little bit and try to find a place to short it. But we'll be monitoring that one closely as a potential short. And with that, I will stop sharing screen and take any questions. Hey, Dave. Dave's still in New York, so you might have to come off of mute in order to speak with us.
Hey, I'm unmuted. Okay, yeah, New York's wonderful. Yeah, Salesforce.
Yeah.
I don't know. Just
I
the
know.
chart does not look good. I mean, I don't know. I would. You're wanting to short it. Okay, which I would agree with.
Yeah, I mean, just because it's right off of earnings, I was really surprised. I mean, it's up like 1.5% at down tape. That's not anything extraordinary. I'm gonna I kind of want to see if it gets a little bit more aggressive. I did a little bit at the 160 level. I did some call because I needed some short exposure, and then I went ahead and took profits on it because the volatility came out of it this morning after, because post earnings, sometimes if there's a lot of volatility, then you can just take the volatility component out and then try not to be too.
What's the PE on that?
EV to EBITDA is 40 times. PE looks ever so slightly better. It's pretty expensive, right? It's 32 times forward PE. Now they've got new numbers on that, but that's the challenge. Is earnings looks horrible because they had. I mean, earnings just looks horrible because they don't have the benefit of the acquisition from last year and some of the things that we're going through on the corporate actions line. Look, it just looks horrible. I don't know another way to say it. Like from a valuation.
I think I remember him saying there's currency risk also.
Yeah, I mean, the third of their business is.
There's a squeeze on the dollar. The dollar's just going straight up.
Yeah. Yeah. Those are all the things that make it hard for me to be too bullish. There are some interesting growth objectives that could take them to the next level. I'm not seeing them yet in this quarter. And my suspicion is even if it is all the right strategic moves, the Fed is saying something very particular to everybody, which is we got to slow it down. Salesforce is called Salesforce for a reason. You know what I mean? You got to it's dependent on sales, you know.
Right.
So if global sales is going down across every industry group and every category, well, you know, that would indicate that the one area where you have security is not the area they're leveraged to, which would be governments and municipalities that don't sell to anyone. So, you know, I don't see how you get really bullish Salesforce off of this particular earnings report at this particular time. Now, if we get a global pickup, all bets are off. But that wasn't what the Fed said yesterday, for lack of a better way to say it. Yeah.
Okay, put your macro hat on.
Yeah.
Do you see us getting out of this, and how?
Out of
now
this.
He's got an employment problem, right?
I'm going to say yes. What exactly are you meaning by that? Because there's a couple different ways that people are talking about it.
Well, he needs unemployment to go up.
Yeah, he does.
Right.
He needs, the other thing he could get is just job postings to go down significantly. Right now, it's still about 2 to 1. And that's not normal. So if job postings went down, it would be a little bit better. What I think is actually happening, given what I'm hearing from Robert Half, Korn Ferry, and ADP. ADP does basically payrolls. Korn Ferry and Robert Half are various hiring agencies, like big time headhunters for organizations that might need, you know, they might have so much HR work, they're going to outsource it. But what I'm hearing from both of them is that the issue that we're really experiencing here is a skills mismatch. So you got a bunch of people that are looking for work, they don't have the right skills. And then you got a bunch of people that are really desperate to fill vacancies, they can't find the right skills associated with it. And by skills, we don't just mean skills like somebody needs to go to school or get trained and get a CDL license, but we also mean experience level. And if I combine that with the areas that are really struggling the most, but have done substantial spend to try to improve the situation. And I don't mean, you know, the tech companies. Everybody's all like, oh, the tech companies, we need tool people. No, the people that I think have actually done the most aggressive job to try to get bottoms in the seat, so to speak, would be the train companies, your trucking companies, folks in blue collar jobs. They're just really struggling. And it just so happens that a blue collar job is not like a white collar job, in the sense that, like, yes, there's a lot of highly skilled, highly trained stuff in white collar work, but, you know, no one dies if someone fails to do their white collar job correctly. Whereas in blue collar work, you can't just send in someone inexperienced to do some of that stuff. Those folks have been struggling, and they've been doing everything from paying for school for folks to promoting people early, and then just making sure that supervision is adequate to not create super liability for themselves. Given that scenario, I'm not 100% sure how this resolves, short of improving the situation on immigration. I know that last one's really controversial, but I throw it out there.
Ooh, yeah.
We are a show after all, so if we just get some immigration in, we probably could take care of some portion of that. But with a 2-to-1 ratio, and with what, I mean, it'd be one thing if the truckers were experiencing a better hiring situation, but, you know, as it looks, they're trying to get blue collar from one place, which is essentially housing construction, to go to blue collar in another place, and it's just not happening the way that with the speed and velocity that you'd wish it to.
Got it. Okay.
Yeah. But it'll eventually resolve. I think the biggest thing that will help him out is that I'm hoping that a lot of these big companies did what they needed to do as far as hedge out this oil and gas. You know, if these big companies were able to hedge some portion of the winter months, then you could end up with decent corporate numbers in the fourth quarter and first quarter. Or let's call it reasonable, not wonderful. You know what I'm saying? Reasonable, not economy crippling numbers, so to speak. Do you know what I'm saying? But yeah.
Well, I mean, you're talking about the oil companies hedging, which I'm sure they're doing.
I don't mean oil companies. I'm hoping, you know, I still have to, FedEx reports this afternoon. I'm interested to see what they're doing on the hedging front, because I think whatever they're going to say about it is going to be interesting across the entire logistics chain, that kind of thing. But, you know, even some of the, I don't know, it's going to be really interesting somebody's got to eat the cost of all this inflation. And thus far, even though the American public has suffered, in fairness, some of the folks in the middle have eaten some of it. And just whether or not they're going to continue to do so is another thing.
Seeing what the market's telling us, inflation is sticking and oil is likely to go up. I mean, I don't see where this is going to get any better from an inflationary standpoint.
Yeah. I agree with you. I'm really, strangely enough, I'm actually really worried about food as well. Like
food also, right?
Yeah, because food inflation, I think, is only showing up 10 or 11 right now. And if you think about it, that's a blessing, strangely enough, right? So because most of the food companies, even with that up 10 or 11, are, so we've got two reporters thus far. So we've got Darden on the restaurant front. They got a whole lot of restaurants. And then you've got General Mills, and both of them are looking, for this year's food inflation. They're not even considering a mitigation. They're all low single digits. And I think they might even be very aware that they've understated the potential for inflation if we don't get something happening here.
Well, you can't stop food, you can't stop oil, you can't stop rent. So
yeah,
okay. Good. Okay.
All right. Well, with that happy note, see you tomorrow, guys. Take care.
Bye.